Hey traders, this is Ron Hayden at Market Tamer. Happy hump day. Hope you guys are having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. Kick off here with the major market ETF, the SPY, up about 1/3%, back above the 5-day a little bit. We're still, targeting the previous all-time highs. We're just within spitting distance of it, really. Whether you look at SPY or the diamonds, the Dow ETF, it was only up 9 cents today, but that's in part just due to Boeing's troubles. And then if you look at the IWM, which is the Russell 2000, it actually was up 1.36% today, but it's still lagging, the overall markets. The other question was, I got asked a few questions, are the weekly charts. How are they looking? If I start with the IWM, and again, each candle now represents 1 week worth of time, it's still doing its inverted head and shoulders. I'm in here. Target is still up here. It's looking okay. I mean, yeah, it's lagging, but there's nothing majorly wrong with it. It's not like it's setting new lows all the time. Here are the Qs. They're again challenging the previous highs. Here's the spiders, again challenging the highs in the weeklies. So what I find most interesting is, all the talking heads out there, and they know who they are, being put on TV and whatnot, writing all these bearish articles when the market was capitulating in December. The news never changed, and here we sit. That's why I'm a big, proponent of trade what you see, not what you think. Put your fingers in your ears and start humming your favorite tune, because everybody likes to pretend that, they're going to call the next this or the next that. And it's what is the big money doing? That's why when I did those recent events at Financial, we talked about seasonality. It's amazing how when the big money decides it wants to do something, this is what ends up happening. And the big money or enough money was selling, but then big money came right back in, and what was once a worry is no longer a worry. And what they do is it just keeps you from thinking on your own to a degree. And you end up missing all this. Now you're back up here saying, oh my God, what did I miss? Well, once you start reclaiming moving averages, it keeps going more and more bullish, more and more bullish. And there was even a back test of the 200-day here on the spiders, and then right up it goes. So, just these talking heads, they like to talk. That's pretty much what they get. Question on the bonds, TLT. We had a gap up last month. Now we have a little gap down. The gap's pretty much filled, but this could be an island reversal pattern. I don't want to go as far as even really thinking that, unless we get a big down day, then that might mark a significant short-term high. But for right now, bonds are still above the 20-day EMA in red, which means they're still bullish. LYFT is another stock I get questions on. If we go into something, let's do 10 days, and let's make it like 15 minutes. So every candle represents 15 minutes of the day. You can see that it's just going lower. We cannot get above some of these moving averages. Now the red line, instead of it being a 20-day, 20 period. A little above it there, couldn't get above it there, couldn't get above it there. We just keep going. Where's the downside target? 0 is a number now. I don't think it's actually going to get there. But to say it's going to drop 20, 30, 40%, no one knows. Often when stocks IPO, it's usually the smart money got in way long ago before it was even public. They're selling to everybody. So the fact that it opened up in the 80s, if they're able to sell and they're not locked up, it's just a boon for them. And now they're selling to, quote, all the retail traders, which is generally considered us. But at some point, we might see a bit of reversal here. And then if we do see it, I'll let you know. But right now, it's still moving down. Let's go take a look at another stock here. There was 2 stocks I just want to comment on. Then we're going to talk about earnings. FSLR, that's the correct symbol for First Solar. It gapped up today, target pretty much back in the upper 60s and then back up towards 70. The interesting note was here in January. It got back up on moving averages, back test 50-day, early March, back test 50-day just a couple weeks ago, and we're moving higher. That tells me that the 50-day right now is a big deal. So this is very, very bullish. And Apple is one of those stocks too I want to talk about. They just kept putting negative news out, just like Netflix. Everything was negative. It gets down to 140 beginning of the year. This is even after the rally. And then what happens? Up she goes to 200, which was the target. It was a gap fill. It's been met, and I talked about it being met even back over here. It was close enough for horseshoes. Well, The next range is going to be around 210 or so. Once again, ignore everybody that's talking. They always got reasons why, oh my goodness, they're cutting prices. That's got to kill the stock. Yeah, it went from 145 to 200. So much for killing prices, killing the stock. Last but not least, earnings. I use cboe.com/news/earnings.calendar. Some folks use like Whisper Earnings or other sites. You can actually use the company's own website as well. Thinkorswim inside Profit Charts has $ for earnings, but you can come in here, type in any top ticker symbol, and then find out they're going to report before or after market. But keep in mind, doesn't mean it's accurate because the company may have changed it and this data could not be updated. So it's really upon the company. You may want to go to the company's website itself, but then again, hopefully they updated their website. So it's not a perfect science no matter where you go, but this is what I use. And you just click on the day and they'll have some earnings. They're only showing like 5 for Thursday, 7 for Friday. But then again, in the next week, they show some others. These numbers are going to keep increasing. The numbers will keep changing. For example, if you want to go to Apple, just type in Apple's ticker symbol, and you can see previously, they typically report after market close. And right now, the end of January is the next report. A year ago, it was February 1st. Year before that, it was January 31st. You get the idea, it's around the same time, but protective puts. With the markets back up, if I go to SPY, back up at the previous highs, all-time highs, some of these companies that missed could easily send them lower. I'm not saying we're going to roll over, but if it's really bad news, we could see stocks really get crushed. And I often talk to you guys about that and give you examples of, hey, this company had earnings, they lost 15, 20, 30% of their value. Well, that can gut somebody's portfolio. So for practice, little homework assignment, get your paper trading, virtual trading account, start going over stocks that are out there, not even stocks that necessarily are trading, stocks that usually move around quite a bit. Add a put at the money for out 90 days, 120 days in time. So if the stock's at 100, I'd be talking about a $100 long put, and put that in that fake account. And then see what happens to earnings. See how the put can save your bacon if the stock drops, and then see what happens if the stock goes nowhere or goes higher and how those put options lose value. It's going to be a great exercise and can potentially be a lifesaver when you need it. That is it. I'll wish you guys all the best, and I will catch you in the next video. Take good care.